The FCA did not outright ban Amigo loans, but its enforcement actions and rulings effectively led to the company's downfall and eventual liquidation. The core issue was Amigo's guarantor loan model and its repeated failure to conduct adequate affordability checks on both borrowers and their guarantors. The central reason for the FCA's scrutiny was Amigo's irresponsible lending practices. The company provided loans to people who were often excluded from mainstream lenders due to poor credit history. These loans required a guarantor, typically a friend or family member with a better credit score. The FCA found that between November 2018 and March 2020, Amigo did not have proper systems in place to assess whether borrowers and guarantors could truly afford the loans. This created a high risk of harm to both parties, often forcing guarantors to step in and make payments they could not afford. As complaints mounted, Amigo's financial position became precarious. To manage the immense number of compensation claims, the company proposed a scheme of arrangement. This was a court-approved plan to cap the total amount of money it would pay to customers for missold loans. The FCA strongly opposed Amigo's initial scheme, arguing that it was unfair to customers, as it would have paid out a tiny fraction of what was owed while benefiting shareholders. The High Court agreed with the FCA and rejected the scheme in 2021. In February 2023, the FCA publicly censured Amigo, stating it would have imposed a fine of almost £73 million for its failings. However, the fine was waived because the FCA determined that it would cause serious financial hardship to the company and jeopardize its ability to pay compensation to customers under a later, revised scheme. Despite getting this fine waived, Amigo was still unable to raise the necessary funds to meet its compensation obligations and continue operating. The company announced in March 2023 that it would cease lending and enter an orderly wind-down, leading to its liquidation. In essence, the FCA's persistent regulatory pressure and enforcement actions exposed Amigo's unsustainable business model. The company's failure to lend responsibly and its attempts to cap customer compensation led to a loss of trust from both the regulator and investors. While there was no single banned order, the FCA's actions created a climate where Amigo could no longer operate, forcing it out of the market for good.